Hey friend, Bitcoin tried to reach the $1,000 mark yesterday. Unfortunately, he didn't succeed, so today we'll analyze whether anything significant has changed on the chart. Maybe there are some new setups we can trade. I'll provide comments as the changes aren't major, and today there will be ample time to discuss an important strategic tool that in my opinion is absolutely key to making money in the crypto market, especially with Bitcoin over the long term. So let's focus on that today. Let's get into the charts. If you haven't subscribed yet, make sure to do so. Give this video a thumbs up. Also, I highly recommend subscribing to my Telegram channel, which I started recently. There I share a wealth of useful information, detailed setups, important news updates, and key events that you need to be aware of. In the crypto market, join and subscribe. The link is right below the video. Mainland channel, Alex Crypto Stick, join us. All right, let's get straight to it. So I draw your attention to the fact that we discussed this matter yesterday, and I want to emphasize once again today that we have several important areas to focus on. Just a friendly reminder, the 200-day moving average, the level of 85,600, and the trend line. Right now, we're trying to break through this zone, but since we're looking at the daily time frame, it's crucial for us to see a consolidation on the daily candles to confirm the breakout. If today's candle drops back to the zone of 84,500 or lower, it means we've fallen back under the trend line and the downward movement continues. This indicates that the market is experiencing a decline and the bearish trend is still in play. However, if we consolidate with today's candle, say around here, and a structure starts to form, the priority for growth increases. I would like to remind you, an important point for me is that this is essentially one of the key tools for decision making. Generally speaking, I never open any market positions without having a solid reason for doing so. Specifically in trading, if we are talking about an explanation, for me it is the appearance of a clear setup that aligns with my strategy. If there's no setup, I don't open a position. Instead, I just wait patiently for the right moment to present itself. I firmly believe that the person who ultimately succeeds and makes money in the market isn't necessarily the one who makes the most trades, but rather the one who knows how to wait patiently and only trades when they see a clear and unmistakable entry point. I remind you, for me, a clear entry point is the formation in this zone above the level of 85.5. Structures of 6 points on the 4-hour. Please note we currently have points 1 and 2, and there is a potential for point 3 to form. Following that, we will have points 4, 5, and 6. It is only at the 6th point that I will discuss the possibility of opening a long position with a target of $92,000. Suppose this doesn't happen and we see something like this. A point forms here, then it falls down, then something else happens, and we go down again. In that case, there is no setup for opening a position here. Either there's a clear 6-point setup and I open a position and hold the long position, or I don't open a position at all and wait for another entry point to present itself. The next entrance, I'm interested from below. Let's take another look now. The most interesting part is zone 78 from $74,000. We can potentially look below in the 83 to 84 range here, but we won't even discuss that at this moment. So for now, I'm just observing and taking note of the situation. The key point I want to draw your attention to is that in this price channel, we've reached the upper boundary. At this point, we could easily come here, trade within this range, and if a favorable setup appears, we can open a position. If we fall back again, then there's no setup, so we just sit tight and wait for further instructions. If this makes sense to you, please give this video a like. Write about it in the comments so there aren't any major changes. I'm pointing out the key entry points again. This is the $78,000 zone, the $74,000 zone. We can potentially consider this locally here, yes, with an eye on some rebounds. Good levels accordingly, we have volume at the level. Here's our trading zone, which is at the $84,000 mark. We could potentially look at a position at the lower boundary of the price channel here. Yes, that's one. And accordingly, 2 is the $82,000 zone, again with an eye on some kind of rebound. I personally don't like this level much. While it's clear that we're counting on a rebound from the lower boundary of the price channel here, when it comes to the $82,000 zone, I would wait for the entry price to be lower. In my opinion, she might be. Therefore, essentially, these are the local scenarios and all the changes regarding Bitcoin as of today. Now, I want to focus on what I believe is a more important strategic issue. But first, a quick traditional reminder. Friends, if you trade, always trade on a quality exchange. For me, a reliable partner for many years has been the Bybit exchange. So if you don't have an account, you can follow the link below this video, register, and give it a try. Use promo code 24676. This is not financial advice. I use this tool myself. So if you want to, have you tried trading? You can give it a shot. You might like it or you might not. I'm just recommending the tool that I personally use. And now, my dear friends, the key point here that I really want to discuss with you all is I will even open the Bitcoin index for this. To ensure we have a clear and comprehensive view of the whole picture regarding Bitcoin, I always make it a point to consider Bitcoin from a long-term perspective. In my opinion, investing in Bitcoin is fundamentally about belief. Either you believe in its potential and future, or you do not. It is this belief that drives the decision to invest or not to invest. Bitcoin has, let's say, a bright future, and over the span of 5, 7, or 10 years, it will be worth more, or you don't believe in that. Accordingly, I act from the position that I believe if, by the way, you are interested. Please write about this in the comments section, and I will create a separate video explaining why I personally believe that Bitcoin will be worth significantly more in the next 5 to 70 years. I'll provide clear and detailed mathematical arguments that might be helpful to you in understanding the concepts better. If you're curious, like and comment about it. If I see any such activity from you, I will make a separate episode on this topic right away. When I look, I only have one question. We ourselves cannot know where the price will go. She can go from the current levels, yes. For example, Arthur Hayes wrote today that he firmly believes we will see the price of $110,000 faster than the mark of $76. For example, it is possible that Bitcoin will go from here to the $140,000 to $150,000 zone, and after that, it will never return here and will soar upwards. Perhaps we will go to zone 110, trade there, and then go higher. Perhaps we won't go there at all. We might fall lower and start growing from here. Or maybe not. Perhaps we'll come here, fall into the $30,000 to $40,000 zone, and only then start growing. There are countless possibilities. For me, the only thing that matters here is my belief, and it is solely my belief. You might disagree with me, but I believe that whatever happens in 57 or 10 years, the price will be significantly higher than the current levels. Accordingly, based on this information, the most advantageous strategy for me to pursue is dollar cost averaging, DCA. I make my purchases not based on the price of the base asset, i.e. Bitcoin, but on the amount of money I want to invest in Bitcoin over time. Let's assume, for the sake of nice round numbers, that you have $1 million and you want to invest $1 million in Bitcoin. I am taking $1 million just for convenience and calculations. You can choose any amount that suits you. You assume that we will have some kind of cycle. It does not matter what kind it will be. Perhaps like this, perhaps like that. Maybe I do not know. Up or down, any scenario. But you assume that this cycle will pass in 2 years and the next phase will begin, during which Bitcoin's value will increase significantly. It will definitely be significantly more expensive in 23 years. The task is to invest your $1 million with maximum efficiency over 2 years. Bitcoin, because you believe, here I emphasize the importance of belief, do you believe it will be worth a lot in the long run? Accordingly, you take and say that in 2 years we have, accordingly, $1 million. Accordingly, 1 year is equivalent to $500,000. Accordingly, we have 50 weeks in a year. Let's round 51 weeks to 50 weeks for simplicity. Therefore, $500,000 divided by 50 weeks is $10,000 per week. Accordingly, you can choose any day of the week that suits you best. For example, Monday. Every week, regardless of how much Bitcoin costs on that particular day, whether it's $1,000, $100,000, $60, $40, or $130, it doesn't matter. You make a consistent purchase of $10,000 worth of Bitcoin. This approach ensures that you are investing regularly without worrying about the current price fluctuations. By spreading your investments over a very long period of time and making regular purchases consistently over the course of 2 years, regardless of the market outcome, your entry price will likely be quite good. This approach allows you to take advantage of dollar cost averaging, which can help mitigate the impact of market volatility on your investments. This is a very crucial and key moment. Consider whether you can catch the bottom price of Bitcoin and buy there. There's a 1 in a million chance, but most likely it won't happen. We don't know the outcomes, and the DCA strategy allows us to leave our emotions at the door. By doing so, we can make more rational and objective decisions. In the crypto market and long-term investments in general, emotions are crucial as 80% of your success depends solely on them. Accordingly, in this case, we set emotions aside and say, I will make such purchases regardless of how much the underlying asset will cost. And then, over time, everything will definitely work out for me. In my opinion, this is the most effective strategy because you can never predict what the price will be in a month, a year, or in 2 or 5 years. However, if you have faith and conviction that the price will be significantly higher over the years, then by making regular purchases of the same amount, you won't have the best entry point because you won't be buying at the market's lowest point, but on average, you will definitely achieve a balanced outcome. To secure the best possible entry price at another station, ensuring that you get the most favorable rate available. If you haven't heard about this strategy or haven't implemented it in your life yet, I strongly recommend reading more about it and asking questions in the comments. I might end up writing a couple of separate posts about it, but you should definitely check it out. In the long run, it's far better and more effective than anything else you might come across. If you ask ChatGPT 5, for example, it will tell you, yes, this is the best investment strategy of those currently existing. So that's the topic for today, friends. That's all for today, Anna. If you found this helpful, please subscribe to the channel, give this video a thumbs up, and leave a comment about what you liked or found useful. Feel free to ask any questions. Your engagement means a lot to me, especially as I'm just starting this new channel. Thank you all very much. Until next time, bye.